Guys, let's talk a little bit about Turkey. I guess there's just disappointment, right? That maybe some people thought miraculously he was going to release this pastor. Steve, it didn't happen.
No, and because Erdogan's not going to back down unless he's absolutely forced to. And the thing that will ultimately force him is the economy itself. He thinks right now he can bluster against the U.S., put on tariffs, which in the whole world economy means very little. But they don't know how to defend their currency. They don't know that you go in the markets, buy your currency, keep it off the market to stabilize it. So the fact they don't
what
know
are they doing on that front? They don't want you dabbling in the foreign exchange markets, right?
No, what then, in effect, they do is raise interest rates, which hurts their own domestic economy. But instead of going to the foreign exchange market, using their reserves, which they still have, and reducing their money supply. When you have a currency crisis, you reduce the money supply, so people want your currency again. Instead, they end up printing more money, which is like throwing gasoline on a fire. And
I seem to remember that with Argentina. I seem to remember that with Thailand. I seem to remember that with Russia. One crisis after another. What do you think, Kevin?
Well, time and time again, we've seen that Erdogan has blamed everybody but himself. And this really started when he took over the central bank and removed its independence. And that's where you started to see the unraveling. And sentiment across the markets is what's going to need to happen is an interest rate hike over there. And that is a sticking point for Erdogan. He doesn't want to do that.
But wouldn't that come down, at least for the Turkish people, who are seeing effectively the price of bread and milk almost double every week?
Yeah.
That would be a problem, right? I mean,
no, it wouldn't be a problem because it would actually reduce. It would stop the currency from depreciating and then the prices of all the goods going up. So it's a good thing.
But their own borrowing costs would go up.
Yes. Oh, yeah. But nobody's borrowing.
No one's borrowing.
They're telling banks to cut reserves just to get some more money flow into the system. Of course, he's told people, the Turkish people, to take care of the lira, sell all your gold, your U.S. dollars, your euros. But there's been calculation that this could be contained because Turkey is only 1.5% of global GDP.
Right.
And Berenberg Bank did a study that if, let's say, exports from the rest of the world drop 20%, that would maybe shave off 0.5% of global GDP.
But here's where psychology comes into play here. It's not so much Turkey itself, but those exposed to Turkey. And then I think it was Goldman Sachs earlier this week, Steve, that had the report, those exposed to those who are exposed, essentially. And it listed about 24 various companies, conglomerates and all that might be caught up in this, even if it's just, immaterial in the scheme of things, nevertheless caught up. How bad does this get?
Well, first on Turkey, a lot of their debt is denominated in dollars.
That's right.
So every time that lira goes down, boy, that puts a squeeze on even more.
We should just, this like anyone, but it means you need a lot more lira to make up for
a lot more lira. And even if they raise interest rates, if they keep printing lira, we've seen in Argentina, Venezuela, and elsewhere, that's not going to stop them keeping printing the money, which just is a spiral. We've seen the ultimate result in Zimbabwe. As for a knock-on effect, if countries like India know how to defend their currency and take preemptive steps now, that we're not going to let this get out of hand, that we know we don't want another Asian crisis like we had 20 years ago. We had a knock-on effect all around the world. If they do that now, they'll be able to contain it to Turkey, and that's going to be a disaster for Erdogan.
But the rupee has been hit. The Indian rupee has been hit. Now, what can they do to contain that? I mean, what you just said, I guess.
Yeah, by buying the rupee. Yeah. And they once had a central banker who knew how to do it. The prime minister there has put in some people that people wonder whether they know how to do the job.
Right.
But they've got the staff there to know how to do it. And Turkey cozying up to Russia. Well, Russia's got its own problems. So it's sort of the coalition of the losers in that situation. But if those central banks, like in India, take steps now, this will not be another contagious crisis.
I'm sorry.
Sorry, I think the biggest threat is a contagion over to China because the yuan also was was pegged at a weaker rate. And when the Chinese currency goes down, that actually precipitates a lot of concern from investors. You saw that last year with the Chinese market sell-off, right? 1,000-point drop on the Dow in reaction. I think that's probably the biggest
connection here?
It's the emerging market currency
right?
sell-off. Everything went down. The South African rand dropped, the Mexican peso. I mean, it just went
But
well, the connection is that the dollar's gotten stronger. And so if we go back to last year, we saw the dollar got weaker about 10%, and that really supported the markets. We saw global growth go up in unison, and everybody was talking about it was harmonious. Now, what's the difference this year? Well, the dollar has gotten stronger, and even against
interest rates have gone up.
It's gotten stronger even more recently against the euro, so that's putting some pressure on Europe and those European central banks that do have those emerging market debt exposures. And so the knock-on effect is if the dollar keeps getting stronger, and then these countries that are over-levered, right? So look at the debt to GDP for a country like China, right? That's why the yuan has devalued. They're slowing down economically. We've seen it from the recent numbers. We've seen actually the small caps and domestically located companies over in China, they're down 20% since the trade dispute has started, right? What has happened in the markets here? They've done better. Why? Because the dollar has gotten stronger.